The 2023 recession just started. Do this now. The 2023 recession is about to start soon, and it's time to start preparing. Here are some things you can do to make sure you're ready. Hey everyone, a recession is defined as a considerable decrease in economic activity as seen by a fall in aggregate demand, which results in a decrease in output, employment, and income. When people cut back on their spending because they lack confidence in the future, this is what happens to the economy. In point of fact, this is the exact reverse of what you want. You want individuals to make purchases. The question today is, how can you predict when a recession will begin? There are a number of warning indicators that point to the onset of a recession in 2023. Let's have a look at a few of them and find out what you can do to protect yourself from these events. The unemployment rate climbs higher. In most cases, an increase in unemployment can be expected during a recession. The unemployment rate jumped from 4% to 10% during the Great Depression. It's because businesses aren't hiring new people, in case you were wondering why unemployment is becoming worse. As a result of declining sales or margins, they are eliminating positions and cutting back on employee hours. The rate of economic expansion is decreasing. Investment plans are put on hold for companies that have a diminished sense of optimism toward the economy. Companies scaled back their investments in capital expenditures, like establishing new factories and replacing old machinery. When businesses reduce their investment spending, they lower their revenue and, as a result, their profitability. The decrease in profits inevitably results in employees being let go. Less money is spent overall by companies and individuals. People tend to spend less money when they have less self-assurance over their financial situation. People are purchasing fewer cars, homes, appliances, clothes, and things related to entertainment. It's possible that customers won't spend as much if they don't have faith in their ability to handle their finances, which can lead to a loop that feeds on itself. Because of the increased difficulty in gaining access to cash during a recession, sound financial planning is even more important than usual and can have a significant bearing on the success of your company. As the Federal Reserve continues to boost interest rates in its fight against 40-year high inflation, many market observers are forecasting that a recession will begin sometime next year. However, the economy has already contracted for 2 quarters in a row, and some analysts believe that a period of cooling off after the blistering recovery from pandemic shutdowns is only logical. Despite the fact that a recession is not a sure fate due to a persistently hot job market, the economy has already contracted for 2 quarters in a row. Even though recessions are a natural and expected part of the business cycle, they still cause anxiety among workers and CEOs alike. Consumers won't be aware that a recession has begun until after it has already transpired, because recessions are also defined in a retroactive manner. Because of this, getting ready for a recession as soon as possible is likely to be a wise decision. Here are a few things you can do to get your finances in order before a recession hits. Take advantage of the extremely competitive labor market while it is still around. At least one economic estimate has placed the risk of a recession over the next 12 months at a level equal to or greater than 100%. Nevertheless, there is scarcely any consensus on when or even whether a recession will take place. The current state of the labor market, which reveals a high demand for workers and suggests that economic expansion will likely continue, is a significant contributor to this level of uncertainty. This is why it is extremely important to keep your current job. Even if you are well liked and respected at work, there is no guarantee that you will avoid being laid off if your company is forced to reduce the number of employees it employs. But it certainly wouldn't hurt if your employer was one of your biggest supporters in this scenario either. Therefore, during the subsequent months, you should do everything in your power to earn your manager's favor. That could mean enhancing your existing skills, taking on an additional project, or simply maintaining a positive attitude at a time when many of your coworkers are likely to be complaining about the additional responsibilities they are being asked to take on. It is reasonable that a lot of people are anxious about a potential economic downturn in the not-too-distant future. Instead of wasting time worrying about something that might not even come to pass, you should take these steps so that you will be better prepared in the event that things do take a turn for the worse. The term Great Resignation refers to the phenomenon in which a large number of employees have departed their employment over the course of the past year in order to pursue opportunities with companies that provide higher pay and better working conditions. According to the ratio of job openings to persons who are actively looking for work, there are currently a significant number of available positions that are not being filled, indicating that conditions that are beneficial to workers are likely to remain. A study conducted in March by Pew Research concluded that changing employment offers increased benefits, including better compensation, increased upward mobility, and improved work-life balance. In response to rising prices, workers have not only been unionizing, but they have also been striking and threatening to strike. For example, the White House needed to take action in order to prevent a likely railroad strike in September that threatened to shut down large portions of the economy in the United States. Watch the state of the real estate market closely. Rents and mortgage rates are skyrocketing in the United States as a result of a nationwide housing scarcity that is estimated to number in the millions of homes, according to a number of studies and commercial estimates. This is one of the key factors contributing to inflation in the country. Due to this fact, you might consider switching your rental home to a more affordable one. The cost of housing accounts for more than 30% of the Consumer Price Index and almost 40% of core inflation. Core inflation excludes the unpredictable categories of energy and food from the CPI. Core inflation increased by 0.6% in both September and August and is currently up 6.6% on the year, which is the same as the previous month's increase. Renters and people who are currently making mortgage payments don't have a whole lot of options. The most they can do is try to avoid an inhospitable market and make do with what they have. Adjust personal finances. During a recession, it is essential to budget one's spending carefully and build up one's savings. You can do this with careful financial planning. The Federal Reserve has decided to raise interest rates, which will result in an increase in the cost of financing purchases of goods and services. According to the most recent median estimate provided by the Federal Reserve, interest rates are expected to approach 4.6% in the year 2023. As a result, financial advisors recommend delaying the purchase of significant items and focusing on debt reduction in the present. Because of the increased scrutiny that banks are placing on applicants, it may become more difficult to obtain approval for personal or company loans. This is because applicants may have a more difficult time paying back the money at a higher interest rate. In spite of the fact that commercial lenders have been raising their own interest rates to match those of the Fed, these lenders have not passed these higher rates onto their clients. As a result of the elevated likelihood of companies firing employees during a period of economic contraction, many professionals in the field of personal finance advise individuals and families to begin saving money in an emergency fund as soon as possible. You might also consider picking up a side hustle. The gig economy as it exists today is robust and consistent. As a result, you might discover that it is not too difficult to find work that you can do in addition to your primary job. You might be able to increase your income significantly if you are willing to put in the necessary amount of effort and time. You can put that additional money towards building up your savings or reducing the balances on your annoying credit cards, which are costing you a significant amount of money in interest. Think about making an investment in bonds. It is difficult to capitalize on the violent swings in the stock market that are formed as a result of the environment of rising interest rates, unless you are a skilled investor who pays attention to the daily movements of the market. That is why bonds might be a better investment for now. In the past few weeks, the Dow Jones Industrial Average has routinely witnessed trading days with gains and losses that number in the hundreds of points. While such volatility can be enticing to day traders, it does not present much of an opportunity for full-time workers in the labor market. Since the majority of major stock indices have experienced significant losses this year, with most falling somewhere in the neighborhood of 20%, investing directly in businesses or index funds may appear to be a high-risk move. However, as interest rates have increased, which has caused turbulence in the equity markets and increased the strength of the United States dollar, the bond market, which is normally less dynamic, has experienced a steady rise in returns. The yield on a U.S. Treasury note with a term of 2 years is currently at 4.4%, while the yield on a note with a term of 10 years is 3.9%. In conclusion, there is a high likelihood that the 2023 recession is just around the corner, and there's no telling how long it will last or how severe it will be. But there are things you can do to protect yourself and your family. Now is the time to start stockpiling supplies, paying off debt, and getting your financial affairs in order. Don't wait until it's too late to prepare. What are your thoughts on the upcoming 2023 recession? Are you starting to prepare at all? Let me know in the comment section below. Additionally, if you're new to this channel, I strongly encourage you to subscribe and click the like button. You can also keep up with all of my most recent videos. See you in the next one.